Hey everybody, I just did a stream with Victor. It was a 90-minute stream, but I want to do my own stream because this is how I learn. I don't know if you're like me, but I really want to understand the K-1 better. You get a K-1 when you invest in a limited partnership. So if you invest in an MLP like energy transfer, like I do, you get a K-1. Because I'm gonna email my accountant because I want to I think I understand it pretty well, and I just want to make sure I understand it totally. And my only concern is my accountant won't understand it as much as I do. And I'm not knocking CPAs, but I usually don't. They usually don't understand what I'm saying. Like their knowledge. I think they just understand taxes. But when I talk about get deep into like financials for like businesses, they're not always, on top of things. But I'll go through the PowerPoint slides. This is just the video I did, just to give you a high level what MLPs are. So an MLP is it's just a publicly traded limited partnership. So you can, if you wanted to go in business with a few people, you can create a limited partnership. So each of the owners, each person gets a percentage of the profits from the business. So if you and four other friends went in on a business and you all put in 10K each, so you all have 20% equity in a company. So you get 20% of the profits. So maybe at the end of the year, if there's $100,000, you get $20,000, and then your friend gets 20. Everybody gets 20, and you have to report that $20,000 on your personal tax returns. That's how you pay taxes. The business doesn't pay taxes. The entity, doesn't pay corporate income tax. That's why they pay such high dividends, MLPs. They don't get tax on a corporate level. It's like, I don't know if you've ever heard of the term double taxation. That's pretty much every company gets hit with double taxation. So if there was a company with $1 million of revenue, just say for 1 year, there was a public company, $1 million of revenue, $600,000 of expenses. So this is a pretty simplified way, but the concept is still the same. So pre-tax income is $400K. Let's just pretend they pay 25% in taxes. So taxes are 25% of $400K. So net income let me know if you're here, and I hope this is not too boring of a topic. So net income for this company is $300,000. And then the company has to, if they pay you a dividend, let's just pretend they pay out 100% of their net income in dividends. So let's just pretend you own a third of this company. And you can pretend it's a publicly traded company if you get $100,000 of dividends for the year for this company. When you file your taxes, you have to tell your accountant. You show them your brokerage account, and that has all the dividends you received. If you sold stock, or if you sold stock at a gain or loss, that also shows on your taxes. So your accountant would see $100,000 of dividends, and that would get reported as as income. So let's just pretend it's regular income, meaning you get taxed a higher rate. Most dividends get taxed at a long-term capital gains rate, the low rate, like 20%. Let's just pretend it's regular income, and then your taxes. Let's just pretend you pay 30% in taxes. So on this particular $100,000, you pay 30% of everything. But I'm just kind of isolating this portion of your income. Then so on this particular investment, you get $70,000 after taxes. So if this is a regular company, they have to pay corporate income taxes, like most companies. So this is double taxation. The company pays taxes before they distribute the dividend, and then you pay taxes on your income, or in this case, your dividend. With an MLP, REITs are similar. There's no double taxation. So if this was identical, but you invested, it was in a REIT, an MLP, what would be the pros and cons? But I'm going to go through my K-1, and hopefully you'll learn a lot. I know I'm going to learn a lot. So if this was an MLP, they usually pay a little taxes, but let's just keep it at 0. So they don't really pay taxes on a corporate level. I could explain later why you do see some taxes on their income statement, but it's usually really low, like 5% of their income. But anyway, so if this was an MLP, they won't have to pay that first round of taxes. So they get $400K to distribute to their investors. And remember, they distribute everything. So you get $133K. You still pay I gave you a 30% tax rate. Let's just pretend you still pay your 30% tax rate. So you pay more in taxes because it's a higher dividend, a higher income, but you have more left over. So of course you would prefer to invest in a company that didn't pay taxes because they have more money to give out as dividends. So that's how it works. These companies, MLPs or REITs, BDCs as well. What would be the pros and cons of taxes on unrealized gains? You don't pay taxes on unrealized gains. So are you saying what? Wait, what do you mean though? Because if you invest 10,000 Apple, you probably want to hold most investments for a year, so you can pay the lower taxes. So if you bought Apple, say 2 years ago, I don't know, you bought 10,000 of Apple, and then say a year later or so, it doesn't matter how long later, it's $15,000. Your portion, your stock in Apple, you have an unrealized gain of $5,000, but you don't pay any taxes. Like the Biden wanting to tax. Oh, okay. You don't pay taxes on unrealized gains. You only pay taxes if you sell it. It would never pass. It would be such a nightmare. And that's kind of what happened with Elon Musk, because he was forced to pay taxes on some of his unrealized gains. And he couldn't just come up with like $5 billion of cash. So he had to sell some of his Tesla stock in order to pay the taxes. It would be, the reason I say it would be a mess is because, like, say you did buy 10,000 of Apple, and that was in, I know that this is probably not going to make sense, but you could just pick any stock. you bought 10,000 of Apple, and then you have to do your taxes in 2021. And under Biden's new thing, you have to pay taxes on unrealized gains. So you might have to pay taxes in 2020, in 2021, or whenever you file your 2021 taxes. So you see, and you didn't sell your Apple. You bought it in 2020 for 10,000. It's 15,000 in 2021. But if this new kind of law passes, you'll have to pay taxes on unrealized gains. So you'll pay $1,500 in taxes because you have an unrealized gain of $5K, right? But like the following year, let's just say your 15,000 is now 14,000. So it went down. So I don't think you're going to get a tax deduction because it went down 1,000 from the last time. So I don't think you'll get a tax deduction of 300, even though I guess you should. But it would just be a nightmare for every accountant to track this. And when there's big swings in the market, like if it goes from 10,000 to 50,000, then you have to pay all this in taxes. So how do you get the money? You might have to sell some of the stock. And then what if it goes down to 30,000? And then like up to 80,000. So now you're up to 27,000 taxes, right? You paid. I'm going to call StockX because this wouldn't happen with Apple, but so just pick a stock. And let's just say, for argument's sake, it went back down to its original 10,000. And you sell it. And you sell it at your flat from your original investment. So you would have paid $27,000 in taxes over the past few years, and it's a flat stock. It's just it gets crazy, right? Oh, in a retirement account, I don't think he would do that in a retirement account. Paying unrealized gains. But in a regular brokerage account, that makes sense. And companies like Berkshire Hathaway, they have to report unrealized gains or losses on their income statement, and that's why they have huge swings in net income. Like, so some years you'll see Berkshire with like 50 billion of net income. The next year they have a loss. But like Buffett says, don't ignore net income. You can look at operating income because of all the unrealized changes. But in a retirement account, it wouldn't make sense to tax people. That's the whole beauty of a retirement account, is that you don't have to deal with taxes until you take the money out at the very end. But it would be the same concept if they did do that. It would be the same exact concept. And then when there's wild swings in stocks, that's the problem, because like if you own your home, like it would be just think about it, like logically it's just ridiculous. So if you bought your home like in 2000 for 100K, right? And let's say it's 2024. And you just happen to pick it up at the right time. Now it's $500,000. That would be a lot of money if they were going to tax you on like I'm saying, you didn't sell your home, you're still living in it, but they're taxing you on the unrealized gain. That's like $100,000 in taxes if it's a 25% tax rate. That's a lot of money. So how would you do that? You just have to, you have to sell your home and move somewhere else? It's ridiculous, right? Yeah, so I don't think that'll ever pass. It would just create such a headache for tracking purposes. It would just be very convoluted, and it's already convoluted enough for the tax system. So these PowerPoint slides, I'm going to get into. This is my K-1 from Energy Transfer 2023. I redacted it. I just blacked out my address. So I'll show you this. I'll show you what my accountant does to file my taxes. And then these are also part of the K-1. They give you more information. Was anybody at the stream with Victor just an hour ago? So MLP is a publicly traded limited partnership. So a limited partnership is when two or more people go into business together. But the LPs are only liable to the amount they invested. So if you start a business under this type of structure, the MLP structure, and say you're the master, you're at the MLP level, then you're liable for the business if somebody sues the business. But if like you have a friend that invests in your business, just like I invested in Energy Transfer, I'm not liable if somebody sues Energy Transfer. I can only lose my investment, what I put in, like a stock. An MLP is like an LLC. It's the same kind of concept. It's limited to the amount you could lose. You could only lose your investment. Let me see what Google says. I typed the wrong thing in. So there's similarities. So if you understand what an LLC is, there's a lot of similarities with an LP. So the beauty of MLPs is they pay very little in taxes. They avoid double taxation, as I just explained to you. I just showed, I don't know if you just tuned in, but this was an example of double taxation. All U.S. companies have double taxation if they pay a dividend. Pretty much, except if you're an MLP or REIT, you avoid it. So usually 80 to 90% of the profits are tax deferred. So you do see some taxes on the income statement, but it's usually really low. Let me see if I have my so let's just go to ET's financial statement. So they pay in the trailing 12 months, they paid 5% of their pre-tax income in taxes. 3% a few years ago, 3%. This is just weird. The only reason it's 63% is because there was a huge asset impairment. And asset impairments stripped out when calculating taxes. I'll show you a regular company. So Microsoft, Microsoft pays 18% in taxes. The way you calculate it, it's taxes over pre-tax income, 19, 13. Still not a huge amount of taxes. You would think a company with 100 billion of revenue and 19 billion of pre-tax, 100 billion of pre-tax income. Revenue is 236 billion. You would think they would pay like such a high tax rate, like 40%. I pay like almost 40% in California. It's like 37, 38%. So I pay a lot more in taxes than Microsoft, but they have a lot of deductions. So that's the beauty of an MLP. It combines a private partnership. Like you could have a small private company, like you and your friend open up a laundromat. That's not going to be a public company. That's your own private business. No one can see your financials. Like a public company, everybody can see your financials. It's public knowledge. So it combines the private partnership, the tax advantages of a private partnership with a liquidity of a stock. That's the beauty of a stock, is you can buy or sell at any point in time. If you own equity in like a small private business or even a big private company, it's not that easy to sell. Not many people are looking to buy portions of small private businesses because they're hard to value. So to be an MLP, you have to be a U.S. company. So there's no MLPs outside the U.S. I wonder if there's something similar. Let me know in the comments. I'm not sure if there's something similar. And the MLP has to receive at least 90% of its revenue from natural resources or real estate. That's why there's a lot of oil and gas midstream companies that are MLPs. The general partner, they're like the usually people who start an MLP, who organize it, are the general partners. They own a small percentage of the business, and they usually manage the day-to-day operations. If you own stock in Energy Transfer or any MLP, you're an LP, not a GP. So MLPs issue units instead of shares. So you don't see stockholders' equity on the balance sheet. There's something called partners' capital because there's no stockholders. And this is a little nuanced, but it makes a lot of sense. And I'll show you when I go through the K-1 how it works for tax purposes. But depreciation is passed through to the unit holders. So you can deduct depreciation from your taxes. Like if you own Microsoft stock or any stock, you can't deduct anything. Like you can't say, oh, Microsoft had $1 billion loss. They invested in this company years ago, and then they passed through a big loss this year. You can't use that as a deduction. You can only report what you received in dividends. if you and your friend had a small business together and it was a rough year and you took a big loss because maybe you had two retail storefronts, and one of them was really struggling. So you sold it, the business to someone else, and you took a huge haircut, a huge loss. Say you had $300,000 into the property, and then you sold it for $100,000. So you took a $200,000 loss. That deduction, you can use that deduction. You and your partner would split it, so you get half each. Same thing with an MLP. And depreciation is just spreading the cost of a fixed asset over several years. So if you buy a car for your business, say you buy a truck, you have a lawn care business, so you need to buy a truck because now you have more employees. So you may depreciate year one depreciation. Say the useful life of the truck is 10 years. So you would depreciate $5,000. Why does it always do that? I can never figure that out. Okay, say you bought a truck in 2020 and your accountant depreciates a truck over 10 years. So if you looked at your balance sheet at the end of 2020, that would be the value of the truck or the car. It would be $45,000. It would probably say something like gross value. It would always say 50,000 in gross. That would always be there. $2020 balance sheet. I'll use accounting term. Carrying value. There's all different words. Carrying value, book value, net value. So in your 2020 balance sheet, it would show $50,000. That's the gross value, or it might say original value. Doesn't matter. Then below that, it would say accumulated depreciation, $5,000. Then carrying value. So that's a value on your balance sheet, $45,000. Then the following year, your accountant would prepare your 2021 balance sheet, and it would say 40,000, and then each year it comes down 5,000 a year until it's zero. But thing is, people think once it fully depreciates, then it's useless. But you can still use the car for like another 10 years as long as it works. Just the book value. The only difference is, say it's 2030 or 2032, and you still have the car, but it's getting a little older, and you don't really want to use it anymore, but it still works. it just doesn't get great grass mileage. So you find someone that will pay you $3,000 for it because it's really old already. So you sell it for $3,000 and buy a new one. You have to report that as income. That's a gain. So you have to, that goes into your taxable income of $3,000. But if it's 2028, right? If it's 2028, the book value is $5,000. If you sell it in 2028, then you can pass through a loss, a deduction of $2,000. I mean, if you sold it in 2025, you can get a big deduction, but you don't really buy assets to sell at a deduction. That's it's kind of like if you have to sell, you have to sell it. Okay. So if you hold an MLP in retirement, which is probably not a good idea to do, you may have to pay taxes before you sell it. So if you receive $1,000 of dividends in that MLP investment, that's considered UBTI, unrelated business taxable income. So you have to pay taxes right away. It's subject to immediate taxation. So that's why it's not usually a good idea. Because if you have a lot, if you invest a lot in an MLP, and say you get a big tax, a lot of dividends, like 50,000 dividends, you have to pay the taxes on that, even though you don't have access to the money. So as you know, most things are tax deferred in a retirement account, but not this. So most stocks you own, you'll pay if you get a dividend and you own the stock less than 60 days, then you have to pay the higher tax rate, 10 to 37%. Same thing with the MLP. You usually have to pay the higher tax rate, 10 to 37%. But if you get qualified dividends, so if you own the stock for more than a year or more than 60 days, you pay qualified dividends, so it's the lower tax rate. I guess people aren't interested in this. Should I switch over to something else? There's only 3 people left. Let me know in the comments if anybody's actually watching. So I did want to go through my K-1, but I mean, I'm kind of losing everybody. I guess I'll try to say this fast. So dividends on REITs, MLPs, and BDCs are usually taxed at a higher rate, the ordinary dividend tax rate, since the dividends are up, they pass through onto your personal taxes as profits. So it's kind of like you're one of the owners in the business. Even though when you own a stock, you are an owner in the business, but it's different with MLP. So LPs, they pay taxes on the income they receive on their personal tax returns. Yep. So ordinary dividends, if you own like a regular stock, you get a 1099 div, but MLPs is a Form K-1. And here's a list of the MLPs. The biggest MLP is EPD, Enterprise, then ET. And you can see it's a pretty long list. I think there's like 50 or so. I guess let's go through the so here's the K-1 I received from ET. So this is how much I earned in 2023. It's hard to see, right? This is the same thing if you own stock in any company. They'll give you a 1099 and shows you the dividends you received. Or if you sold the stock at a gain or loss, it shows you that as well. So I'm a partner. I'm an LP. So I own. It doesn't matter how many shares you own. They figure out the percentage. If there's 1 billion shares and you own 1 share, it's a very small percentage of the company's profits. But I just get a percentage of whatever the company gives out in dividends. But also, as you can see, I get to pass through a lot of the losses. There was a loss of $505. That's my portion of the loss. The loss is probably like $1 billion. But my portion is like 0.0001% of the company. So this is what my accountant uses to prepare my taxes. It would be the same thing if, like, you and a few buddies, you own your own business. Say you had a landscaping business, and it was you and 2 friends, so you were 1/3 each. If there was $300,000 of profit after all expenses, then each partner gets $100K in the business, and it would show up on something that looks like this. If it was a limited partnership, of course, it would have all these sections. It could have been $300,000 of net income, but there might have been losses. Maybe let's just say you bought 2 trucks for $50,000 each. Say you bought them 3 years ago, and then after 3 years, you were talking to your partners, and you're like, we don't need 2 trucks. We're usually together most of the time, and if we're not, the other person uses their car. Like, it doesn't even seem like we even need these 2 trucks. It's kind of a waste of money. So you pay $50K per truck, and say 2 years later you sell one of the trucks because you're like, let's just sell it. I know someone who's willing to pay $30,000 for it. Let's just take a little hit on it because it's a waste. We pay insurance, so you take a $20,000 loss. Let's just make it $21,000 for the math, because you paid $50 and then you sold it for $29. So $21,000 loss, but you just want to get rid of the truck because you don't really use it that much. So your portion of that loss is $7,000. So that would show up possibly in one of these sections. So your accountant would know that they can apply that loss to your income. And there's a lot of things in here. There's net rental real estate income. That was negative $25. Because it's a business that does a lot of different things. So that may have been like $200 million, but my percentage is $25. So I get a deduction for that. And I'm not exactly sure what that is, but I could probably dig a little deeper. Let me know in the comments if people are following this. It's not the most straightforward topic. I get interest income because the entity, the MLP, invest in probably other companies, or they just have corporate bonds they bought, like money market funds, to hold some of the cash. I'm a limited partner, so I get part of that interest income. Like, let's just say there was $1 million of interest income. And let's just keep it simple. There's 1 million shareholders, and I just own 1 share of the company. There's 1 million shares out in the market, and they earn for the whole year $1 million of interest income. So I would get $1. It would show $1 here of interest income. And we could look at ET's. Maybe we should do that. That would be interesting. Maybe you can check, make sure they're not screwing you over. I had a feeling. So they list interest expense. So I think that it's combined. Interest income and interest expense are combined together. Okay. Unit holders may be subject to limitation in ability to deduct interest expense incurred by us. In general, we're entitled to deduction for interest paid on accrued. However, our deduction for business interest is generally limited to the sum of our business interest income and 30% of adjusted. Okay, so I don't think we're going to find the number. We'd have to dig a lot more. It would just be interesting to kind of show you how the numbers. Okay, I think dividends, that would be a good. It says ordinary dividends, $6.95, qualified dividends, $6.95. But that's actually only a small part of my dividend. The money I received is right here, distributions. That's what they call my dividend distribution, because most of these dividends, they're only on 10% of the business that I receive these two dividends on. Because a majority of the business is within the MLP structure. Because remember earlier I showed you 90% of their revenues. They have to have at least 90% of their revenues as from the real estate or natural resource market. So that's the percent that's taxed on the MLP level. 10% or so is taxed on a regular dividend. I wonder what that is. Other information. Distribution 7151. Let's this is not as straightforward as I was hoping. This shows the distributions. Okay, distributions to partners. I'm a partner. So that's their distributions for all of, that has to be 2023. Okay, That's their distributions, $4.2 billion to all their partners. Now, how many shares are there, or units? They're not shares. Preferred unit holders. I'm not a preferred unit holder. I'm a common unit holder. Oh, here we go. Interest in net income. There we go. We were looking for that earlier. Okay, here we go. Weighted average common units. Okay. There's 3 billion. Let me just make sure I did that right. There is 3.37 billion. Okay. Distributions, units, which are shares. Okay. This is interesting. I hope anybody finds this interesting besides me. So each unit holder, okay. So if you own 1 share of ET, you receive $1.34 for the whole year in dividends, which makes sense because their stock price is 16. That's about an 8%. That's a big yield, right? 8.4%. I'll be right back in 2 minutes. Usually when I leave the stream, more people come on. Like the number of people viewing the stream goes up. So with that information, I should just not be on the stream at all. I should just leave it forever. And eventually I'll get to millions of viewers. Okay. So each unit holder gets $1.34 in distributions. How many units do I hold? I hope. I think I own, because I paid $8.64, and I bought it. I dropped 50K into it. So I own roughly 5,800 shares. It's probably within a few. I don't know the exact number. So I calculate $7,775 in distributions. So it's actually pretty close. It's 71.51. This right here, this 695 twice. You're not getting 695 in ordinary dividends and 695 in qualified dividends. You only got 695, but they put it in both buckets. I can't remember why. If there's any tax CPAs, let me know why. But I think if it's in both buckets, it's only it's considered qualified. Would you ever consider playing some copyright free? Yeah, of course. Would that be better, you think? Asman, what's up? That's a different username. Your full name. Did you get my email about the DCF? So it's pretty interesting, right? So I was able to back into, so I confirm ET is doing things on the up and up. But my accountant doesn't really need to know how many shares I bought. They just need this number to put onto my taxes, because they use this information to create my W-2. I mean my tax return. W-2. I don't know what this 2017 is. Other information. Net long-term capital gains. Yeah, I think that would be better. Have something in the background, like the thing is, when you get these forms, it shows your deduction. So you can deduct like depreciation and other things on your taxes. If you want to pay no taxes, the only way to do it is you have to die, unfortunately. So you put 50,000 into the stock. Actually, here's another nuance that most people probably didn't realize. So yeah, so this is a good example. I put it roughly 50K into the company when I initially invested. So the 71.51 and the 695, that my cost basis gets reduced by the dividend. So my cost basis is down to 42,154, and it keeps. So say that's my 2023 cost basis, and then of course this is as of 3/20/2023. And let's just pretend for fun I get the same type of distribution each year, 78.46. I know it will be different, but just to do this. So I wouldn't pay any taxes until my cost basis goes down to zero. And I want to talk to my CPA about this to make sure, but I think this is how it works. So I wouldn't have to pay any taxes, but the stock price may keep going up or down. What you receive in dividends is separate from the stock price. So say in 2027, I didn't pay any taxes, but my cost basis is $10,000. But what if my stock is worth $100,000 and I sold it? So that's my my profit. Well, not my profit. That's what I receive from the sale. But I have to deduct my cost basis. So I pay taxes on the $89,000. Yeah, let me know, Asman, if you have any questions on it. So you pay $89,000, not pay, but that's, you get tax on that. So if your tax rate is 25%, you pay ordinary taxes, the higher tax rate. So you pay $22K in taxes. Of course, if the stock went down a lot, you pay less taxes, but you don't want to lose money on the investment just to pay less taxes. Okay, so that's how it works normally. Okay, let's just pretend it's 2027 and you die. Then, and let's just say you have 100,000 of ET stock at this really low cost basis. The people, if you, in your will, say you give all the stock to your child. Now your child, the cost basis is stepped up to its current amount. So so your child's cost basis, if they receive this stock, would go up to $100,000, whatever it's trading at today. So that's a way to avoid paying any taxes on it, but you don't benefit, your family does, which I don't really care. I believe you can get up to $1,000 a year in Roth without having to pay any taxes at all. Oh, Corey, yeah, I think you're right. Because of it's treated differently than a regular investment. So yeah, that makes sense. Were you the one who sent me that article? You emailed me the article about MLPs a couple of years ago, and we talked about it. Okay. No. Okay. I thought you were. I asked them to like send me the article they're referring to, and they did. Yeah, Ozzy. Okay, Ozzy, Corey. Sounds same to me. Yeah, he goes, are you sure distributions are taxed as non-qualified dividends? I thought it was deferred until you sell your units. And I think this person's right. The thing is with taxes, like there's not one rule, even though there should be one rule. It depends how your accountant, if they understand everything and how they file it. Sometimes accountants make, mistakes. As long as it's not a mistake, like if you had a 50, as long as the mistake isn't extreme, it wouldn't matter. That's why I want to talk to my CPA to see how they're doing it, because everybody I spoke to about this topic, MLPs, and I try to get really dig deep with them, they didn't understand what I was talking about. And some of those people are accountants, so it's kind of like, who knows about this stuff that I can talk to. Also, in my K-1 packet, it's a packet, it's like 10 pages. $200 at $950, that's a lot. I mean, we don't have infinite money, right? And we don't know the future. So, I mean, but I totally get it, because I'm always pissed off. I'm never happy even when I make a lot of money. I'm just mad I didn't put more money into it. Like, I should be happy my Meta is up 500% since the bottom. It was down to like 88 or 86 at the low. Then it broke through 500. I should be really happy. I'm just pissed off I didn't buy more when it fell. So this is this is the first time I'm looking at this stuff myself. So I'm learning with you. So ET owns their pipeline infrastructure. That's how they make their money. But they also have subsidiaries. They bought USA Compression Corp. I don't know when they bought it. Sunoco. And they bought Sunoco gas stations. These are both tickers you can invest in. So if you liked Sunoco gas stations but you didn't like Energy Transfer's pipeline business, you could just invest in ticker SUN, which is also limited partnerships, Sunoco LP. It's a lot smaller than Energy Transfer because this is a subset of the entire company, Energy Transfer. But you can invest. It pays 6.5% dividend. Market cap's not a small company, 7.3 billion. So these are all the gas stations, Sunoco gas stations in the U.S. But bonus points, who after ET bought the Sunoco gas stations, who retained the Sunoco gas stations in Canada? Because ET bought this off a Canadian company, but that Canadian company kept the retail gas stations in Canada, and they just gave ET the U.S. Sunoco gas stations. And I think they changed the name. The failures keep you up more than the successes put you to sleep. It's true. It's so true. So you can just look at ET. This is a summary of their operation. But if you wanted to get more detail, that's interesting that they provided here. So I had a loss, ordinary. Because if you receive dividends from like this company, it's ordinary dividends. But if you receive dividends from like Microsoft, it's qualified dividends, assuming you held Microsoft for at least 3 months when you got the dividends. And then ordinary dividends, you might have to pay 33% of taxes, and qualified dividends, you pay 20% of taxes. So your accountant has to separate all these sections because they can't combine it all. At the very end, I mean, if this was your only income, say, ordinary and qualified dividends, you were retired, you didn't get money from anywhere else, then it would be your total income for the year. Let's just make it more so it doesn't look so weird. Say you're retired and you don't make any money. The only income you get is the dividends on your portfolio stocks. You might not even live on these dividends, but it's just extra income. You may have a lot of savings from selling your home or whatever. I don't know. But it would summarize it. It would say your I guess 39,000 would be your total income for the year. 11,000 of taxes for the year, and that's your after-tax income, $27,000, almost 28. Does anybody find this interesting? As just a regular person, you don't need to know this, but it's just interesting because it is what it is. You're not going to change it. It would be different if you were part of a limited partnership with like you and like 4 of your buddies, like I said earlier, and you had a business together, and you everybody owned 20% of the business, and there was like a lot of money at stake, like $1 million of revenue and a lot of expenses. You would just obviously double check this form to make sure they're doing it correctly. But when it's a big company, I'm sure they're doing it correctly. And no matter, even if they weren't doing it correctly, it wouldn't matter. You can't do anything about it until somebody, I guess, higher up says you have to amend your financials. You're doing something wrong. That would be cool if you were the whistleblower on a company that you were the one who figured out they were doing things incorrectly. But how would you even know? I mean, I have a hard time just figuring out what this stuff is, because if I did think something was incorrect, I'm sure if I was able to contact someone who knew about it, they would probably tell me, no, you're incorrect. You need to do this and this. That's the most likely scenario. It's kind of like Yahoo Finance. People like, oh, it sucks. It's always wrong. But pretty much any time someone emailed me about Yahoo Finance, said, oh, this is just stupid. They don't know how to calculate things. And I said, no, they did it right. You did it wrong. So this is just a breakdown by entity. So this is my personal part of the business. Even though business interest expense, that's my interest expense. Oh, right. It's right here in 3,000 and other. So that's my portion of the interest expense. That's already deducted on line 1. Oh, that's deducted here. Because when they pay interest on their debt, I get that deduction on my personal tax returns. When you invest in like a Microsoft, all those expenses are part of the company. You only get the dividend if they give you a dividend at the end. But since I'm a partner in this company, I get to deduct all the expenses on my personal tax returns. Then there's total unrelated business taxable income. That's what I said earlier, UBTI. So if I held this in a retirement account, it wouldn't matter because it's under 1,000. But if this was over 1,000 of UBTI, then I would get hit with a penalty. I would have to pay the taxes, even though it's a retirement account. Section 199A, PTP. Does anybody know what that means, PTP? Income included on Schedule K-1s. Can someone Google it? Section 199A, PTP. Just what the acronym stands for? I always like to know what acronyms are. It's like a hobby of mine. Oh, it's a pass-through partner. I'm sure it's pass-through partner, because this says publicly traded partnership. A publicly traded partnership. Publicly traded partnership. Not that that means anything. So section 1, okay. So that's another deduction, 770 deduction. Because these companies they own, all the if there are any deductions or anything, it's kind of part of this number. I don't add these three together. It's all consolidated. Gross receipts. That's just how much I own. That's my value of the company, 87,000, which makes sense. This is really interesting. See, if I was by myself, I probably wouldn't go through so much detail. I'd probably be bored after 5 minutes of doing this, and I'm like, okay, I'm just gonna watch TV or watch videos on YouTube. 1388. So at the end of the year, the stock price was 1388. And I own 5787. Where was it? Where was my stock? My value of my stock is 80K. Spicy Life, what's up? On 7846. I'm able to actually back into these numbers, which I'm shocked I can do. I thought it'd be impossible to figure out. It's almost like identical. Look at that. I just don't know how many shares I bought. I think it's around whatever I wrote. I think it's around 5,700, but I don't know the exact amount. But I know I invested around 50K. So this number is my value of my ET stock plus my distributions for 2023. I only get taxed on the distributions. I can't get taxed on the stock unless I sell it. UBTI included on K1, 770. I think I'm the only one who is really into this. Okay, then there's UBTI from debt financed dividend and interest income, 113. So that 113 is this 770 minus 657. Yeah, I'm not exactly sure why. I could just tell you that's what they did, but I don't know like what. So this is Okay, yeah, PTP is publicly traded partnership. So that's the income, my portion of the income, lines 1 and 2. Okay, so this is lines 1 and 2. So 770 is my portion of the income. That's the deduction, because I would get, there's a $772 loss, and then there's net rental real estate income. They received, I got $2 of real estate income. That means they just sold one of their properties and had a little gain. So that's my portion of the gain. So how do they, I wonder how they get to 772. Separate ordinary business income. All right, your units. $55.35. Why do you say that? Because I put roughly, okay, when I sold my business, I invested in a lot of things. I invested in this, 50K. And I just looked on Yahoo Finance, and I saw it on, oh no, I didn't look at Yahoo Finance. I looked on my phone, because I wrote down on my phone how much I paid for each share of stock. I don't remember exactly how much I invested. I know it was around 50K, but I know I paid $864, because I always write down my cost basis in my phone. And I just did the math, and that means I have roughly 5,787 shares or units. Right. Each David, thanks for commenting. I'm glad somebody's watching instead of me. Yeah, I calculated, this is how much the company paid in total to all their unit holders, $4.2 billion. And this is how many unit holders they have according to their financial statements, $3.1 billion. So each individual unit holder, if you own only one unit, one share of ET, your portion of the dividend is $1.34 for 2023, for all of 2023. So that's my portion of the company. And I know I have bought this many shares, 5787. Within, I'm going to go to E-Trade now, real quick. I want to see how many shares exactly. I'm almost there. David, is that clear now? Are you unit 7417? Where did you get the 7417 from? Oh, I see what you're saying now. No, what are you saying? I'm confused. Where did you get 7417 from? I bought 5790. Okay, so that's 5790. I was close. So I calculate 7779, and my portion, I'm $67 off. I mean, it's close enough. I mean, 74.17 was my gross receipt. I'm just trying to find that number, 74.17. Where do you see that number? Oh, is it up here? Oh, this 87,417? Is that what you mean when you say 74.17? Go to the right next to AG. Wait, what's AG mean? What's AG mean? I missed the 8. Okay, that's fine. Okay, so my stock, I'm not a CPA, so I don't really need to do this. My CPA, well, they don't even need to go into this deep. They just need the numbers, but they don't like do due diligence on my taxes to make sure ET is paying me. They just look at a number and report it. But I'm sure, I would imagine a CPA would know how to do this. 57.90. Okay, that's how many shares I bought, 57.90. And I don't know what stock price they use to calculate. Actually, I could probably back into it. 87,417. Okay, 1374. So that's, come on, why did I close it? Fuck. Yeah, no problem, David. This is how we all learn. Just, I'm going through it fast too, so okay. I have an idea, but I think my idea is incorrect. I don't know what price they use, what share price they use when they send out the K1s. It doesn't really matter. I'm just curious if I get back into it exactly. Okay, it doesn't matter. Okay, but at least we kind of know it makes sense. Yeah, that's my gross receipts. Even though when I say gross receipts, it's not like I got that money. because a lot of it is unrealized. Then we have the UBTI. We talked about that. Depreciation adjustment for non-conforming states, 1173. So that just means because remember, I'm a partner in a company. I'm not just a shareholder like in a normal company. So same thing with, remember the company with you and your 4 friends have a company. All the profits, all the losses, all the deductions get passed down to each of the partners based on a percentage of ownership. So this says, okay, AMT depreciation adjustment for non-conforming states. I'm pretty sure I know what that means, but I just want to, for AMT purposes, you generally must depreciate business assets over a longer period of time than you can for regular tax purposes. This creates differences between regular depreciation AMT. What does AMT stand for? Alternative minimum tax. If you place a property in service after 98, you don't have to make an alternative minimum tax, a depreciation adjustment on the home itself. However, AMT depreciation rates may apply if both of these are true. Okay, it's alternative minimum tax. Okay, that makes sense. Okay, so my portion of the AMT for non-conforming states is $73, because certain states are conforming states, so I'm able to deduct the depreciation. But certain states, for some reason, they're non-conforming, so I can't benefit from the depreciation if our pipelines are in those states. And it's $73. So these are the non-conforming states. It's taking forever to open. I was hoping there'd be a list. Okay. And your CPA doesn't have to figure the stuff out. They're just given these numbers. ET has to calculate all the depreciation on a state-by-state basis in order to figure out which are non-conforming. And then whatever is non-conforming, they get a whole number, like say $50 million, and then they divide it up by my percentage of the company. So it's pretty straightforward once you have the program set up. But it's interesting to look at it and to figure it out. So non-conforming states, there's a lot of non-conforming states. That's 73. It must be one of these columns. Entity level, state tax. Ordinary income, a loss, net rental income. Potential bonus depreciation, interest income. I don't know which one is non-conforming. I thought it'd be a column. It would say non-conforming. interest, dividend income. Yeah, I don't know which column is non-conforming, but yeah, I don't know how to figure that out. Then we have entity level state income tax, 24. So entity level, I would have thought this column would sum up to 24. But it doesn't. I think there may be, I saw 3 charts like this. Maybe you have to sum up all 3 charts. I guess they have a chart for ET, a chart for USAC, and a chart for Sun, which is why they have 3. Okay, I don't think it matters. It would be good to know, but gross income from operations. So that's how much income I made from my investment. Okay, my original investment was, see, they have this on a computer, so I paid $863.97 per share. And then I got $57.90. Okay. No, that doesn't equal. I thought that would. I guess you don't include dividends. That's still 30. Co-pilot, basis calculation for determining the partner's basis in the partnership. The LP uses the adjusted basis of the partner's interest. The adjusted basis includes the initial investment, any additional contribution adjustments for income deductions. Are you talking about if you die and give your money to your family members? Co-pilot. What does that co-pilot mean? Is that just like a website? Basis calculation for determining the partner's basis in the partnership. The LP uses the adjusted basis. Yeah, they use the adjusted basis based on your original cost basis minus. Oh, you're talking about how your cost basis goes down every year you receive dividends. Yeah, that's what something like. I don't know how they get the gross income from operations 21. I guess it's 87. Gross income from operations. I don't know how they get that. That's I asked what price does LP use when it sends a K-1? Okay. Yeah. That's definitely something I wouldn't trust for this topic. You can ask them who's the oldest president to get elected, something like that. Partner basis items and remedial items, 6203. Yeah, I don't know what those are. And this gives us a state-by-state breakdown. Okay, well, I hope you learned something new. I definitely did on MLPs. I guess I could. So I did 3 videos this morning, kind of a lot. I did One Oak, the oil and gas midstream, eBay. I did PDD, but I don't have it on my desktop anymore. And I did I'm going to do tomorrow JD. Yeah, and Coupang. So do you guys want to talk about JD or Coupang, the North Korean, the Amazon of North Korea? Or JD, is there any other company we can do DCF on? Valet, DCF on REITs. I'll be right back. 2 minutes. Yeah, I drink a lot of water. So, does anybody know the main reason I like to do live streams instead of a regular video? Why do I like? I do like that, but no, the number one reason. Yeah, sometimes I do get bored, and the interaction's good. No. I mean, I do like those things, but like the big okay, Valet. Let's do a DCF, then we'll look at the financials real quick. We'll look at their I don't know if they released their first quarter results, but whatever the latest results are. Yeah, no retakes. I don't have to edit it. Like I can just do it and not spend because when I shoot a video, if I shoot a half hour of content, it's another hour and a half before I can release it. It's because I got to edit it, then I got to rewatch it to make sure I got the right things out. Editing takes a while. It takes a good hour. Then I got to upload it. It's just annoying. But I do like this too. I was just saying if it's between doing a video and live, I'd rather just do live. Even if live is 2 hours, it still takes less time than a 20-minute video. Yeah, Vale is great. There's other copper. Brazilian companies can be a little risky. Did we do this last time? I think we did this last time on the stream. Vale, right? I think it's a good play. They pay a great dividend. They report their financials in US dollars. I did a couple hours ago. But it's kind of a high whack. The whack is really high, but JB Weld, I'd say it's in a range from. I think I'm in pretty close to where it's trading at, $12 to $14. I would say it's I think. Well, let's see. I think the stock, if it hasn't come down, because there's a lot of concern with China, and they're big in iron ore, Vale. They were much higher in 2008. They were 23 in June 2021. They were real low in COVID. They got down to 7. So it is up a good amount since then, but yeah, there's a lot of downward pressure. Because there's a lot of concern with China, recession, And China uses half the iron ore in the world. Sure, don't make it easy. So 42 billion in 2023. I want to see, like, do they have like the 10K? Okay, SEC filings. Yes, Sabanye. That's a pretty popular one. That's a South African Sabanye Stillwater. That's oil, right? Yeah, South African oil company. I guess we can't get their full report. It's just stupid. Okay, 42 billion in revenue. Yeah, so you can see they report US dollars here in Yahoo Finance. Yes, okay, platinum. Yeah, the Sabanye Stillwater is, I was gonna say gold, silver. It's PMG, right? Is it Platinum Metals Groups? Is that the acronym? But okay. So revenue, it was real high. It kind of moves with iron ore. Because I think that's their biggest revenue generator, right? Iron ore. It's the largest producer of iron ore and nickel in the world. So it's the largest of iron ore, and half the iron ore is used by China. Usable iron, Australia? Did anybody know that? Platinum Group Metals, PGM. What did I say? Did I say that? Platinum. What did I say? This can't be right. Anybody? Australia uses the most iron ore. See, what website do you want to go to? Now, Australia produces the most iron ore, but it says, wait, production. Okay, so that sometimes when you make a mistake, like if I didn't realize China was number one in iron ore usage, I might have taken that number as, but I second guess myself because iron ore. So yes, I don't know the exact numbers, but it's definitely the biggest consumer of iron ore. Well, it doesn't matter. I can't find a chart. So yeah, so it's highly dependent on China. The reason it's they use so much iron ore is because of the number of homes they're building. Because there's a huge shift in status, or I don't know how you want to name it, but like you have like 100, like 100 million people who are moving from poor people who couldn't afford a home. You have like 100 million people, every decade who want to buy a home for the first time. So you have a huge number of people who want to buy their first home. And then you have another 100 million people who want to upgrade, who used to be on low income. Now they're middle income people. So they want to upgrade to a better home. And then you have the people who were middle income people, and now they want to move up to a really nice home. So you have just this huge shift in groups in China. So there's just so much demand for homes. Like in the US, there's always demand in homes for every country. But in the US, there's not that many people who go from not being able to afford a home to being able to afford a home. There's always going to be millions of people going from that group to another. But in China, there's just an enormous amount of people who are moving from a group of people from not being able to afford anything to getting their first home, albeit it might be a small home, but they want to get their first home. So there's a huge dynamic. But it's not growing like it was growing a lot for many, many years. It's kind of plateaued a little, China. I wish I could find something more detailed. I can't find any. I was looking at Vale's. Oh, I was looking at the wrong website. Okay, here we go. 2024 Global Metals Mining Steel Conference. Vale's April presentation. Building the Future. There's always a lot of injuries and deaths in this field. It's always been that way. Upstream dam decharacterization program. Iron ore operational stability. So this talks about just individual projects they're working on. I was looking for a little more high level. Vale's performance. Oh, here we go. Performance. This is what I was looking for. Number of high potential consequence. Okay, they're lowering their death rate. It went from 4 to 0, 11 to 3, 7 to 2. Iron ore production, 71 million tons. So that's up 6%. S11D production. S11D is the largest iron ore mine in the world. That's that's in Brazil. Iron ore sales up 15%. Even though they production went up only 6%, sales went up 15% because of they have it in reserves. So this is their highest production since Q1 2019. That's what everybody wants to get back to, 2019 levels before COVID. Copper production, that's up 22%. Nickel, walking the talk on ESG. So EBITDA is down. It's 3.5 billion. It was 3.8 billion. So copper's been really, besides I know EVs use a lot of copper, EV cars and EV infrastructure for the charging stations. They use a ton of copper. Is a lot of copper used in like AI infrastructure? I think so, right? The provisional prices negatively impacted the average price. So that's why prices of iron ore have decreased. So it moves a lot with the price of iron ore, the company. So the average price went from 123 to 100. So that could really impact them. So cost improvements. It looks, I'm surprised I don't have a ticker for iron ore. Copper is a good one. Wow, copper's up 89%. Oh, that's for 5 years. So just in the past year, it's up 37%. And this stock is down 8%. Yeah, I remember it took it was really growing a lot at one point, copper. I guess that was in February. It started to take off. There's a couple of what's the big Southern Copper Corp? That's probably the best company if you want exposure to copper. The best company, definitely the best in the U.S., but I think probably the best in the world. I don't know if they're the biggest copper company in the world, but they're strictly copper. I mean, they do other commodities, but it's mostly copper. Where Vale is iron ore. They're really dependent on iron ore. That's their main one. The company, they're still paying a lot of lawsuits on this Brumadinho mine. Like that's been going on a long time. Yeah, it operates in 30 countries. I should do some due diligence. Go to Brazil, look at their locations, make sure everything is on the up and up before I invest $5,000 in the company. Yeah, so they're really involved in railroads. And Buffett loves railroads. Every country, especially in Europe, is really dependent on railroads. Yeah. BHP is kind of like it's similar to Vale. Like their main product is iron ore, but they definitely do copper. I'm not sure about Glencore. I'm not sure what their big commodities are. Glencore. FCX. That's Freeport. Yes, that's what I was trying to think of earlier. Freeport McMoran. That's a good stock. Look at that stock. It's up 400% in 5 years. And it pays a dividend. A 1% dividend, but it's up 400%. Usually when a company pays a dividend, that limits the stock price appreciation. Because if they didn't pay a dividend, the company would be worth more. It's just math. When a company pays out a dividend, the stock price goes down a similar amount as dividend payment. Anytime a stock goes up a lot, like I always feel so hesitant to buy it. I'm like, because I could have bought it like when it was 50% less. And then like it was like Apple. I'm like, I could have bought it when it was 500 billion market cap. Now it's $1 trillion. It's too much. Then it goes to 2 trillion. That's why just don't time the market. The best time to invest is when you have money. And the best time to sell a stock is when you need money. Don't try to time it. It almost never works out. And if it does work out, wait a little longer. Wait another few months. Eventually, you'll see timing doesn't really matter. For most stocks, not like a commodity stock, I think timing is a little more important. The company is the world's largest producer of molybdenum. I remember I did a video. It took me a while to get that, to say that correctly. Molybdenum. Does not occur. It's a major copper producer and operates the world's largest gold mine. Okay. I used to like really pump up copper for like in 2020, like 2021, 2022, but I'm not sure. Scrap copper was about $33 a pound here in Canada 1 year ago. Now it's $6.30. So it's a hot commodity. Do you think the ship has sailed? The ship has sailed. It's so hard because every time when a stock goes up in price, it should be less and less appealing as a buy. And when a stock goes down in price, it should be more and more appealing as a buy. I'm not saying you have to buy every stock that's going down and sell every stock that's going up, but the idea is, if you think about it that way, everybody has its point. Everybody has its price. Everything has its price, right? So, like if you need a car and you love this car and someone's selling for $100,000, that might not be the right time. But then if you walk past it, you see it for $90,000 because he still didn't sell it. It gets more, and then you don't buy it a week later. So January, you love this car your neighbor's selling. And then March, it's 80. And then April, it's 70. And then you're like, okay, I got to buy it. You have to want something. You're not going to just buy everything that goes down in price, but if there's something you want and it goes down and down and down, there's going to be a point when you're going to buy it. It's like that with a stock. If you really want to buy a stock and it comes down, but it's psychological. It's different with a stock because when it goes down a stock, it should be more appealing, but we always get concerned, oh my God, it's going to go down more. I don't want to buy it now because it's going to probably hit 50,000. And then it does. And you're like, okay, thank God I didn't buy a 60. You go, okay, let me wait longer. And before you know it, it's back up to 100,000. And you missed out because you were waiting for the bottom. And like, it usually doesn't go from 50 to 100. It goes from 50 to 60. But you're like, oh, it was just at 50, so I don't want to buy it at 60. So then you wait another week and it goes 70, 80, 900. So don't try to time the market. If they want to electrify the power grid to handle EV cars and AI, they will need lots of copper. That's what I'm saying, but what's the dependence of copper for AI? Like, what commodity? Wait, scrap. Oh, Dan, I didn't even answer Dan's question. Copper futures. So how come I didn't see this when I... Oh, this is not Yahoo Finance. That's why I didn't see it. Okay. Not that past prices don't indicate the future, but it's good to see when you are looking for an investment. Copper in 2012 was 386. It was sub 2 or about 2 in 2015. Did you miss the boat? Based on this, and you'd have to do a little more. Yeah, you generally, unless you love something, it's kind of like I say, there's a home you love and you're willing to pay an extra $20,000 for the home because there's another person who loves that home. That home is in the perfect neighborhood where it's near a school your child goes to. So unless you're in love with copper and you need it, yeah, usually buying something at an all-time high is not the best time to buy it. Usually you want to buy something when there's a pullback, but it depends on your investing horizon. If you have 10, 20 years to wait it out, it doesn't really matter when you invest. But I do like copper. I've been saying that for a long time. With AI, you will be able to simulate potential trades. Okay. AI. How much? Why do you keep saying IA? Am I missing something? Is IA something else? Or do you just mean AI? IA data centers consume tons of power compared to regular data centers. Is that something? IA? I don't want to suck an idiot. Like I'm assuming you mean AI. Okay, got it. I just didn't want to go off on a different path. Okay, and more scrutiny of AI has brought new estimates about how much copper, in particular, it could. The thing is, things usually go up well before they're monetized. Remember, like Tesla, it went up way before they started making any money. They were losing so much money. And then when they finally made money, when they finally made enough to justify the stock price came crashing down. It was like 1.1 trillion at the peak, and now it's half that. So when do you buy? So $20 in December 2019, but this is what years of trading at 500 PE or 1,000 PE, or if they even had any profits at all. So it was trading at such a overvalued point. Then when they finally hit the levels, like in the last 3 years, they've been making a lot of money, but that's when the stock comes down. So you kind of have to buy it before. The problem is people pump up stocks, a lot of stocks, and either they fall to almost nothing because they never make profits, or they just fall to kind of like a good like landing area where they belong. So you have to overpay for everything. You just got to hope what you're overpaying for ends up becoming a good company. It's like Amazon too. Like people overpaid for years. Then it finally plateaued. But that was, I think, a little better company than Tesla. I mean, Tesla, they haven't proved it yet. They proved they're a $300 billion company. I don't think they've proven they're a $1 trillion company. Amazon has proved it. It's hard to tell on this, but they were losing so much money in the early 2000s, losing billions and billions. But it finally took a while for them to start becoming profitable, like 15 years. And now they're still profitable and they're doing even better. So yeah, they're all-time high. Thank God, because I felt bad. I managed my wife's portfolio and mine. And it seemed like all my stocks are going up and all hers were struggling. In May 2020, I bought at 112, I got Amazon. I put a lot into it. And it was up like 50% after 6 months. And then it was like down 35%. And that was in the bottom at the end of 2022. But fortunately, it's come back. But it was a pretty volatile ride. Net present value. Well, I guess that is, and wait, did you? Is calculate MLP the same as? Yeah, that is the DCF. You have to use the NPV formula to calculate the DCF. Well, to use in the model. The only difference is like NPV is kind of like more like rudimentary, where DCF it's it's kind of like a judgment call on like what is the WACC, what is the terminal value you're going to use, what are the future free cash flows you're going to use. I mean, the stock price and market cap we know what that is. The hard part is to, like Vale, like the website I was looking at, because the WACC is probably one of the more important things. I mean, there's not many inputs, but like this Finbox I use, I mean, look how high the WACC is. This is like the third standard deviation. But if you want to, the only reason it's such a high WACC is not because the company is struggling. It's because they're in Brazil. That's the only reason. So it's a huge country risk premium. There's three huge companies who do mining, iron ore, nickel, copper. Vale, BHP, and what's the other one? Yeah, BHP is Australia. There's another one. I think it's US, the other one. Does anybody know? BHP. Rio Tinto. Oh, is that in the UK? Yeah, UK. Glencore. Come on, Glencore. I'm joking. Glencore is pretty big, right? But 60, it's a pretty good but they're not the three big ones. But this is I didn't realize they were that big, actually. Glencore. I wonder, they must be in a different industry than other industrial metals and mining. No, I guess they're in the same industry. Did they get really big recently? Huge. I don't think that they mine, they just process. Okay, maybe that's why they weren't on my list. Yeah, I guess this website, one setback is they only list companies that trade in the US. But Rio does. This website has been having problems because it should show, it usually shows the top three, BHP, Rio, and Vale. But for some reason, I got to let those guys know. But anyway, we'll just go back to, here's, and Glencore is not, yeah, this website has been messed up lately. Okay. So if you think about these three companies, the three biggest mining companies in the world, they pretty much do the same thing. Like, they're very similar companies. They mine similar products. They're all profitable. They all have probably fairly similar margins. But look at a WAC. It goes from 7 to 9 to 14. Like, if I use, so I'm going to use the WAC. So if I use this WAC, for BHP, I get a $27 stock price. And that's if I use a low WAC. I might, miners are a tough investment. Exactly why I never invest in these commodities. I just don't have the conviction. They do pay a nice dividend. But it's like if you have a company and your friend has a company and both of you sell similar things, and say you both have exactly the same amount of revenue and profits. So you can do a DCF on your business, his business, and you could based on your current free cash flow, you would predict a future free cash flow. And both of you had identical numbers, but his stock prices were 28, yours are worth 11, and you're like, why? Why is mine less than half of his? We both have the same numbers. We both have the same margins. And then I would just say, well, you're in Brazil. He's in Australia. That's the risk, the country risk, which doesn't seem fair, right? Because it doesn't matter your surroundings. Like if you're a building where you manufacture products is in a really bad part of your city, like there's a lot of crime in that part of the city. It's just not the rent is real cheap though. That's why you have a factory there. And then your friend has a factory in like a really posh part of the city. I mean, but you both make the same thing. You both have the same revenue and profits. I mean, It's just, well, why? Just because you're in a bad neighborhood, it makes your company worth less? You can just move your company to a posh part. You can't just move from Brazil to another, but that's how it is. And the problem is, even though you know this, you know why the stock is always undervalued. But if it's always going to be that way, it'll never go up. It's not like you bought a stock, and a U.S. stock that you really thought was worth $100, and it was only trading at 20. Let's just say 50, because the market hasn't realized the potential. But you saw it. It will probably hit 100 if it does grow the revenue as you think. But if this company has proven it, they've hit their revenue targets, but the stock just won't go up. Hey, Godskin, you got it. Thanks for commenting. So you just have to accept the fact it's always going to trade at these low levels. Like I'll show you what I mean. Damn it. Okay, it was taking longer than I thought. You could do this. Oh my God. I was wondering why that was getting screwed up before. Does anybody invest in these companies? A lot of times, a lot of stocks that seem unattractive, like volatile or risky, they pay high dividends because they want to get people to buy the stock. So they have to entice them to buy it, so they pay a high dividend. So if you if you buy one of these stocks at the right time, you may get paid, 300%, three times your investment in dividends alone. And if you do, it's great. So this is how you compare them. Revenue. Well, let's do a traditional. Price of sales, and then Price to free cash flow. Yeah, what time?
You said it was at 5:40.
Okay, are we going today or no?
I'm asking you.
What do you think?
I would still go.
Okay.
I'm gonna drive now.
Come on. So Vale has 42 billion of revenue, 56 billion market cap. So it's a 1.3 price of sales. So that means their market cap is 130% of their revenue, or 1.3 times. So 75% of their market cap is revenue. And look at like BHP, only 36% of its market cap is revenue at 2.8. It's trading at such a discount. Their free cash flow is 12% of their market cap. It's almost twice as good as these others. Rio is only 7%. Free cash flow is 7% of their market cap. So if it's so appealing, why don't more people buy it? Because if more people bought it, like if they saw, wow, a price to free cash flow of 8, which is really good, and if more people started buying it, like they should, and it doubles the market cap, now it's more in line, 16.1. So now it makes more sense. It's trading at 16 times free cash flow. It's more in line with the other stocks. But if it doesn't go up, just because you found a really great value, Rio is 6%. But the great thing is you get a huge dividend. 13.5%. So you get a 13.5% dividend because the stock price is so low. If the stock price goes up, like if it doubled the stock price, it would be 6.5% dividend, which is still higher than these two. And you could look at the previous. Oh, this is better. So this is their historical yield. You can see it was still like 8% in 2015. It did drop in 2018, 2019. But it's been double digits. It was 13% in 2022. It did come down to 8, which is still a great dividend. 6, now it's back up to 11%. And the forecast is 7%. So even if the stock seems undervalued, you get paid. So that's a nice thing. Unless you really think they're going to cut their dividend and start losing money, but that's kind of unlikely because the demand for these commodities is always going to be pretty high. And this is US dollars, so free cash flow. But I don't really invest in commodity stocks myself, so I invest in energy transfer though. That's not true. I don't invest in commodities like the raw commodity like GLD gold, but I'll invest in companies. Just ET right now, but I've had other companies. Okay, any other questions or? So, good luck investing. Can't remember if there's anything else. Oh, does anybody like these fun facts? I put this stuff together myself. I don't copy it from anybody. I just try to put together some high level facts about different topics. Let me know, and I could add any topic. Okay, we're gonna go see what's that movie? Something Man with it's Man in the title. Oh, he was in a Barbie movie. Ryan Gosling. It's hard to think on the live stream. Is it Fall Man? The Fall Guy. Fall Guy. Yeah, we're going to see the Fall Guy in a little bit. So I'll see you tomorrow, possibly, if I stream. Have a good night.